It is July 2nd, 2015, and I would like to introduce B, the Guerrilla Economist. What's going on as far as the economy?
Well, the main thing that people need to understand here, Dave, is that the king dollar, okay, the perpetual Ponzi paper fraud scheme that we've been running for the last 40 to 50 years it's coming on its last legs. And that's what people need to understand. When you're looking at the Middle East, you're looking at the Ukraine, you're looking at Greece, you're looking at the Eurozone, these are not isolated events. These are, in fact, all intertwined. And all of it, folks, is the dollar, the king dollar system being done away with, falling apart, buckling under the pressure, being removed from the world scene, and something new is being birthed on the landscape. And that's the main thing that people understand. And people need to also get to the fact that in their heads that there are two competing schools of thought currently right now on the global stage. The first competing school of thought is that which has been running for the last, I'd say about last 100 years or so. And that school of thought is the paper school of thought. This centers around central banks, which are private institutions that are not beholden to any governmental entity, that prints currency out of thin air, backed up by nothing, and all the paper instruments that such a system would create, and the trust and faith in quote-unquote paper, which is your stocks, your bonds, your currencies, your all your different mutual funds, annuities, and things of that sort. Anything in paper, we in the West have value to it. We think it's the greatest thing. Oh, look at my stock options. Oh, look at this. I got this annuity, and I got that mutual fund. The other competing school of thought is a school of thought that has existed since time immemorial. People say it's existed for the last 6,000 years. I can confidently tell you that it goes back even further than that. And that is the school of thought of hard assets, in particular gold and silver and precious metals, and how that relates to trade, how that relates to currencies, how that relates to the global economy as a whole. And so this is what the world is divided into. It's not just East versus West. And that's a false Cold War concept that a lot of people have. But what it really is and what it really boils down to is a hard asset revolution that is spearheaded by gold being the absolute, not only the tip of the spear, but being the entire spear itself, versus a paper dragon that is based on fraud, fictitious numbers, cooked books, and outright criminal behavior. So that's what we're facing in the world, Dave. And if you look at it, now people ask me about Greece, and folks, here's the hard reality. The United States of America is in a far worse economic condition than Greece. The advantage we have over Greece is we have a printing press. The advantage we have over Greece is we can outright lie to you. Today the jobs report came out. It says unemployment dropped to 5.3%. You figure people out there will be doing cartwheels, but that's not the full story. You have a 5.3 unemployment rate, but you have the permanently unemployed, those who can't even find a job. That number is approaching 94 million. Get that into your heads, folks. 94 million. You got 52 million on food stamps. You got 101 million on some sort of welfare. You got 10.6 million receiving unemployment benefits. Overall, 52% of the country is effectively not working. This is a recipe for disaster. In other words, our numbers are far worse than Greece. The advantages that we've had for a long time is because our currency, the dollar, Dave, has been world reserve currency. And the oil is priced in dollars. So that's been the saving grace. Well, the fact of the matter is those two things, those two threads that this whole entire economic Ponzi scheme is being held by is about to break. It's amazing when you see how the stock market really works. I mean, the Dow's, over 17,000 points. And people are like, oh, it's a great time to get involved. Folks, you got to understand what's driving the stock market is a few things. Number one, it's companies buying and selling their own stocks. Number two, you have high-frequency trading computers that literally go in and out of a trade 10,000 times in a millisecond, moving the trade before you even get a chance to buy. In other words, most of the trade, almoot 80% of the trade that occurs on Wall Street is done computer to computer with really no human involvement. Okay, so when you watch, MSLSD or Fox Business News or Bloomberg Television, and you're seeing the guys on the trading floor here in New York, that's window dressing. Nobody trades like that no more. That's nonsense. Another thing that most people don't know, the real Wall Street is not in New York. It's actually across the river in New Jersey. So when you got all these manipulations that are at work, especially the central bank that's printing all the money and creating a Wall Street slush fund that they live off of, it's absolutely going to drive the numbers up. The numbers are being driven up artificially and manipulatively because there's really no hard reason. There's no hard reality on which any of these numbers are based.
Just cover the importance of this because everybody in Karatbars, we talk about this as insurance on the inflationary, deflationary paper money. Can you kind of cover the importance of gold and Karatbars?
Yeah, absolutely. First and foremost, folks, seek your own financial counsel, wink, wink, nudge, nudge. But what I'll tell you from my experience and what I'll tell you from dealing with a lot of institutional investors is this. The smartest money on the planet is buying gold, and they're buying gold by the metric tons, okay? Gold is the currency of kings. China, okay, in order for China, Russia, the BRICS nations, right now, for those that don't know, the BRICS nations, okay, Brazil, Russia, India, China, South Africa, and those countries alone, their GDP has already eclipsed the G7. I just want to let you know that. It hasn't been officially been put out there. They say, by 2017 or 2018. But the BRICS have officially eclipsed the G7. And the reason why the BRICS are ravenously buying gold is this. It is the only thing that can protect you from a currency collapse. Now, you might say to yourself, well, V, you know what? How do you know the currency is going to collapse? How do you know we're in a collapse? How do you know the stock market's going to fail? Everything looks good, V. How do you know that? Well, folks, here's the hard reality. I gave you some numbers earlier in the call. But the reality is that the question is not if we're in a collapse. The reality is we are in a collapse. We are in a contracting GDP. We're in a contracting economy. Gold is the only way for you to protect yourself against a currency default and against hyperinflation, which will be hitting these shores. It's not a matter of if, it's a matter of when. And when you look at China, you look at Russia, you look at all these nations that are buying gold at a ravenous clip, they know something. There's a reason why China has about 30,000 metric tons of gold, and the Russians the same, and the Indians the same, because they know it is what's going to protect you against a defaulting dollar system, number one. And number two, it is the gold-backed trade note that is now becoming on the world stage. See, the Western banking system, what's happening in Europe, the UK, and the US is bankrupt. It's broken. When you look at these countries like the G7, I like to call them the insolvent seven. It is a club of a bunch of broken, solvent wannabes whose time has long since passed. And since the U.S., when you look at us, we don't make anything anymore. In fact, when I looked at it, Dave, I think the top three biggest exports that we had were trash, recyclables, and pornography. That's it. Those are our three biggest exports. And then globally, you can't get anywhere with that. Okay? So this whole thing, and I always say this, the only exploit that the average American has, Dave, is gold. And it is so important that you get it. And the reason why I recommend Karatbars is this. When I do massive gold investing, I have a client call me up and say, hey, V, you know what? I want to put $3 million, $5 million, $7 million, $10 million, $12 million in a gold account. I don't go down to the bank down the street, or I don't, go to Jimmy John's Coin and Carry and be like, hey, can I buy some gold coins? No. I'm partnered with brokerages, and we call up a broker in what's called a good delivery system, okay? And the good delivery system is something that is outside of the banking system. It's completely different. And because it's outside of the banking system, there is no third counter risk. What that simply means is this. If I were to go buy gold in a large amount and decide to keep it in a U.S. bank, if that U.S. bank goes bust, there goes my gold. And they'll give me an IOU saying, yeah, we'll pay you sometime between 0 and 99 years. That's not security. That's insanity. So when the smart investors and institutional investors, as well as sovereigns like China and Russia, when they want to buy gold, they go to their brokerage or a sovereign wealth fund and they say, okay, we want to buy gold in the good delivery system. Okay, fine. The broker goes directly to the refiner, not just any refiner, they go to an LBMA certified refiner, London Bullion Market Association. And the LBMA certified refiner, LBMA sets the standard for gold. So when you're buying LBMA gold, you're buying the purest, best gold on planet Earth, okay? And each LBMA gold bar that we get for our client, folks, is serial numbered. And that serial number is important because as soon as you punch that serial number in a vaulting facility or in a bullion bank, all right, that number is the pedigree of that gold. It tells us where it was mined, where it was refined, okay? Then we vault it, and we vault it overseas. Typically, we like Switzerland, we like Singapore. That's where we vault our stuff, and sometimes we even vault in Panama. But usually Switzerland or Singapore, outside of the banking system, and then we deal with a bullion bank. So if the client needs the funds, we could either wire we could liquidate the account and wire them the funds in the currency they're choosing, or number two, we have the gold shipped directly to them. What blew me away about Karatbars is that Karatbars does the same exact thing. And rather than getting involved for millions of dollars to open up an account, for little as $60 per card, you're getting an LBMA certified refiner with the LBMA number on it. You're getting a Karatbars security feature, which is the highest security feature, meaning there's no question to its authenticity or its credibility of the card, of the content of the gold that's on the card. There's no question to it. Okay, so this is not some loose, 1 gram gold you can buy on eBay from God knows where and God knows what purity. This is legitimate. And then with that feature, folks, Karatbars can either ship you the gold or they could vault it at their own facilities. And if you need the money, they could liquidate it and have it put on your card. That's amazing. So what Karatbars is doing, folks, is doing the same thing with what we do with large institutional investors, but they're doing it for the average Joe. There's nobody else on the planet that offers anything remotely similar. And then on top of that, they're actually paying you. They're actually paying you to refer other people and do the same thing, replicate what you're doing and getting paid for. Folks, that's a win-win situation. That's what got me involved in Karatbars, because it is the only exploit, and it's the only way for the average person in the U.S. to save themselves from what's coming.
V, I wanted to jump out there and just, if you would, illustrate the difference, because everybody knows you can buy gold stock on Wall Street, and I want you to cover what they're really getting versus physical gold versus paper gold.
Got it. Well, paper gold, or an ETF or a derivative thereof, what that simply means, that paper is worth the paper it's printed on, period. With the way ETFs work, folks, like an exchange-traded fund, is this. A bank could pronounce themselves, let's say JP Morgan, right? They can say they have X amount of silver or X amount of gold in their vault. Okay, God only knows if that's true. I'll be honest with you. I've worked with some of these institutions before, and I've worked within some of these institutions. I've worked for a British investment bank, in the United Kingdom, in London, and I'll tell you, there's really no accountability when it comes to the yellow metal with these banks. Okay, so bear with me on this. So they can say that we have, I want to pull out a number arbitrarily out of thin air, 100,000 ounces of gold. Okay. They'll say we have 100,000 ounces of gold in our vault. But then they sell these paper contracts that they use to trade on the exchanges. And these paper contracts, these ETFs, they can take out, 10 million ounces, 20 million ounces in paper contracts based on 100,000 ounces of gold. And the scheme works just so long as all the millions of investors they sold those thousands of ounces of gold to, they don't immediately come back and be like, hey, that ounce of gold that I have here, I want to exchange my ETF and take physical delivery. As long as that doesn't happen, the scheme works. So when you're buying paper gold, folks, you're literally buying the paper product, and it's only worth the paper it's printed on. And it's important versus when you compare that to the physical gold is where it's at. That's real physical gold. If you don't, there's an old saying that says if you don't hold it, you don't have it. And that's the difference. When you're on an ETF, first of all, the way stocks work, folks, I talk to clients, customers all the time. They're like, well, I have stock in Apple. I own it. You don't own jack. Look at your stock certificate. Look at the verbiage on a stock, the legal verbiage on it. You're a beneficiary owner. The primary owner of any company stock, once they do an IPO, is the DTCC, the Deposit Trust and Clearing Corporation. That's in 55 Water Street right here in Manhattan. They own the stock, and they can revoke your ownership at any time. So you technically don't own jack. Okay? So it's important for you, and this is what, again, the mentality. You have the paper mentality, and I've talked to plenty of paper millionaires. Okay? Paper millionaires. They're worth millions of dollars, but on paper, they own nothing in real hard assets. Well, I own my house. No, you don't. You don't own nothing. You don't own your house. Don't pay your property tax, and you'll find out who owns what real soon. So the reality is, folks, you have to have physical possession. And that's the difference versus something paper and intangible. The world is going through a paradigm shift. Either you're going to be a part of the hard asset revolution that is coming upon this earth, that is being birthed onto the world stage, that is displacing the United States dollar, or you're going to hold on to the paper and see your wealth vaporized. And that's just the facts, Dave.
I got to ask you, this is really important what you're saying. It's waking a lot of people up on this call right now. And I'm going to ask, as far as gold pricing, why is gold, the price in gold right now kind of low? And everyone's wondering, when is it going to go up? In your expert opinion, can you share with us?
Absolutely. And I'm glad you asked that question. Here's the reality, folks. Remember I told you, we are living in a paper world or a paper paradigm. And we're living in the empire of paper, which is the United States. We create every single fraudulent piece of paper for every single thing you can imagine here. Okay. Now, this whole contraption, this whole Ponzi scheme is held together by a central bank. And in our case, it's the Federal Reserve. In the Europeans' case, the ECB, and the Brits, they got the BOE, the Bank of England, and so on and so forth. Now, if you're a central banker, if you're the head of a central bank, and you want any sort of monetary credibility, you do not want high gold prices. You don't want it. Because high gold prices, and even high silver prices, or even any precious metal prices that are high, does not make your currency look good. So what you do is you work in collusion with financial institutions to fix the price of gold. And there is unequivocally right now, as you folks are hearing my voice, there is those that are involved in the price fixing of gold day in and day out, these Western banks in the UK, and with the U.S. involvement as well, that fix the price of gold every single day, are currently under investigation for fraud by BaFin, the German regulatory agency, as well as Interpol. Because there is rampant fraud in the gold price fix, and I'll tell you why. Folks, it costs a mining company close to $1,300 an ounce to bring gold up out of the ground. There's no reason why gold is going for $1,100, $1,200 an ounce. There's no reason for it. Okay, at $1,100, $1,200 an ounce, the Chinese, in their own words, one of my guys out in Beijing said it, in Shanghai said it best, and also in Hong Kong. They always tell me, V, we love it when the gold price gets smashed to $1,100 to $1,200 an ounce. It's being gifted. That's their own words. It's being gifted to us because they know the actual supplies on gold is dwindling. Folks, do you realize if you were to call me today and say, hey, V, I'm going to put in an order for $5 million worth of gold, it's going to not only take a little bit of time, but what's also going to happen, folks, is that the premiums jump because the supply on gold, and I have a finger to the pulse in the gold market on a large scale every single day. The supply is dwindling. Okay, now the banksters, these cronies in Wall Street and the economic corridors here in the U.S. want us to believe in the old adage, supply and demand. Right? If something has a high demand, then when the supply runs low, the demand runs high. Right? They want us to believe that, except when it comes to gold. There's far less gold now than at any time before, and yet the price is remarkably low. And that is simply because Remember what Dave and I talked about earlier? We talked about the paper contracts. You have 100,000 ounces of gold in a vault. You put out 20 million ounces in paper contracts, and they're selling off those contracts to smash down the price of gold. That is a fact. That is an absolute fact. Well, here's what's about to change. It was announced about a week and a half ago, maybe 2 weeks ago, that China is going to go live with their gold price fix, and it's happening this September. Okay. Now, why is that important? Well, China is launching a price fix because they're one of the biggest buyers of gold on the planet. And they're launching this price fix not to have something that is based on paper, not to have a price fix based on paper, but base it on actual physical supply. Okay? Think about that. And not only are the Chinese doing this, but also the Indians, the Russians, and the rest of the world, 105 countries that see the importance of gold, they are in full support of the Chinese gold price fix. They're in full support of it because it's taking control away from the West. And I want to tell you something, folks, and I want you to pay very, very careful attention to this. Why is it that countries that have no gold, yes, you heard me correctly, no gold, like the United States, we do not have any gold here. You might say, well, we have 8,000 metric tons of gold sitting in Fort Knox. Yeah, that was gone. There's mothballs sitting in Fort Knox right now. It's gone. Been taken over, hijacked into private accounts. It's amazing to me, Dave, that countries that have no gold, like the U.S., the UK, Europe, like the French, these countries that have no gold are the ones that are involved in the gold price fix. I find that hilarious. And that is why this whole move of the gold price fix to China is a game changer. Because for the first time in a long time, countries that actually have gold in physical possession will be the nations that will dictate the price based on real demand and real supply. That's a game changer. Now, people ask me, well, V, what do you think the price of gold would be in, let's say, 5 years? When this whole entire dollar system is put on the trash heap of history, where it belongs. The most toxic asset on the planet right now is the U.S. dollar. And when that's cast away, people say, well, how much will gold go up? Well, when the Chinese decide to back their gold, to back their yuan with gold, and when gold returns to the preeminence of what it was before, which is a medium for trade settlement among nations, you can expect the price to go anywhere between $54,000 to $60,000 per ounce. That's real. Why do you think the Chinese are buying 30,000 metric tons of it if they think the price is going to drop tomorrow? No, because they see the handwriting on the wall, Dave. They see the handwriting on the wall, and the scales of just weight and measures have been laid, has been brought out, and the United States has been found lacking severely.
Yeah, this is shocking and incredible news, and we're all kind of seeing the writing on the wall. How much time do we have? What time frame do you see out there for people to start moving their paper into gold?
Do it now. You need to do it now. Because, again, let me tell you something, folks. If you want to go buy gold in Asia, you'll say to yourself, well, look, gold is $1,100, $1,200 an ounce. Yeah, go try to buy gold in Asia. There's a 20% premium tacked onto that price. Okay, and the U.S. is typically between, I'd say anywhere between 4 and 9% of a premium. So we pay the lowest prices on gold. Okay, but in Asia they're paying a higher clip because it's getting harder and harder to come by. So you need to jump on it now. This is not a conspiracy theory. This is not a wishful thinking. This is not fear mongering. This is data. This is math. These are numbers. That every day, and I don't care if you want to, put your head in the sand or shove it somewhere else. These are numbers that hit you in the face. You cannot deny it. You can deny that Dancing with the Stars will not be on tomorrow. You can deny that. You can deny a lot of other frivolous nonsense that don't matter. But the hard numbers equate, and it's screaming at you that you need to do something now. And in terms of a time frame, one of the things I predict is going back to July of 2014 is that by the end of 2015, the United States dollar will be completely undermined as a world reserve currency. Completely undermined is something that's important here. I didn't say destroyed. I said undermined. What does that mean? In other words, the United States dollar is going to lose its polish. Meaning in the beginning of 2000, 75% of all world trade was done using the dollar. Today, by every single major firm that tracks this activity, little over 40% of world trade today is conducted in the dollar. So you're seeing a significant drop. There you go, undermining. Okay, China and Russia. China's biggest economic sector was manufacturing a couple of years back. The biggest sector in the Chinese economy right now is banking. And their banks are much better capitalized and bigger than any U.S. bank, guaranteed. Okay? So China and Russia are signing energy deals. And those energy deals are supplanting the petrodollar, where oil will no longer be priced in dollars. The handwriting's on the wall. So we're losing world reserve currency and we're losing the petrodollar all at the same time. So this undermining is going to continue. And what we're tracking, some of the cohorts and the colleagues that I work with, we're looking at a 2017, sometime in 2017, to be a massive date that if you're not out of paper completely, then you're in for it. You're in for the big one. So we're heading for some very, very critical times. I'm thinking about, 2017 going into 2018, this thing could go pop. Definitely by 2016, you need to have your ducks in a row. You need to have your ducks in a row at least by 2016.